What's going on, y'all? This is Kia Keely. I'm going to show you a quick overview of the LVL framework so you can jump in and start using it right now. So what the LVL framework is a very simple system about understanding price action and how you can have a three-step process to automating your trades. And so the LVL stands for liquidity, validating the trend, and then locking on to targets on the other side. And so we follow this setup within each trade every single time, all right? And so when we start with liquidity, we're looking for a sweep of some previous swing high or swing low, right? And that we know is where price is most likely to reverse. Those are those swing highs and lows, previous days, weeks, monthly highs or lows. And those could also be at hourly or session opens, okay? And so we first look for a reversal off of these levels, all right? After that, we validate the trend. We are looking for higher highs and higher lows. And so with higher highs and higher lows, that can be when we're validating an uptrend. With lower highs and lower lows, that can be where we're looking for a downtrend confirmation. We're looking for this after that liquidity is swept. We also use time frame continuity to confirm the trend. And that is how we are just overall getting a sense, okay, we are confirming this reversal. We're trying to go towards the other side. And so lock on in terms of the other side is when we figure and understand where is price going. After the liquidity has happened, after the trend is validated, where is it going? Where it's likely going to those previous swing highs and lows on the other side, where open orders are resting, of course, right? And so those can be gaps, those highs and lows, like we said, opening prices, where it can lock onto, and that is where we are using as our target. And if we're trading options, picking strike prices can be very useful when identifying this area. And so when we go through this, it essentially, like in this example, we may see some liquidity being swept down here. We're making higher highs, and then we make a significant higher swing low at this point. And then where we might expect it going is, well, to that other side here, right? Where those previous swing highs are located. And that's kind of what happened as we progressed on over here. And so what we use during this is that we're looking for, or we use these precise levels to get us more precision in terms of our entries and our exits. When we have swing highs and swing lows, we connect those levels and those form broadening formations, right? Essentially the playground in terms of where price can trade within and where it can also go. Actionable signals after those sweeps of liquidity, those help us with getting precision about when exactly the trade is ready to be taken. And that is when we have an inside candle, a hammer at the bottom of, from a bounce sweep, and then a shooter from the top of a top sweep, right? Those can help us get and prepare for the trades ahead. And again, time frame continuity is what we use to validate the trend and see what is the momentum in terms of the direction that the price is going based on those colors of the time frames, as well as if those time frames are breaking highs, lows, or both, or neither. And so what we would look for in a regular trade here is something like this. First, we would identify swing highs and lows. That's always step one, okay? And then we would draw broadening formations connecting those. Then we would wait for an actionable signal and enter, typically. After we expect one of those levels to happen, and we see here at step two, after sweeping a previous low, we have a hammer, and that triggers and gives an opportunity for an entry. That could be an early entry, or it could be the precursor to getting into a premium trade. And we're sort of going to discuss that with the upcoming models, all right? Afterwards, we validate the trend, which could be using time frame continuity, or at this point, a higher low and a higher high. This high that was made intraday here, higher than the previous one. And we lock onto those sides on the, we lock onto those highs on the previous side, right? And we just complete our trade with step four. And so this is often what a winning trade looks like using this framework. And so when we talk about the LVL, we break it down into these three core models, okay? The 25 cents, the parallel channel analysis, and the open magnet theory. And so the 25 cents is what we're going to be covering mostly here, this quick overview. And it follows the same steps of the LVL. Essentially, what we're looking for is when we hit the high of one previous higher time frame candle, and then we reverse and retrace back through the range of that same candle. And as we retrace 25% of that, that becomes our entry. And that on the other side of the range becomes our exit. And so how this works, we would be looking for the liquidity because price is hitting one side of a range and then reversing back into the range. We would validate the trend if we cross the halfway point of that previous candle, right? That would be what validates and really confirms that we're likely to get onto that target that we set. And since time frame continuity is what would be ideal to go in the direction of that reversal. And then we would lock on to the other side. The target would be the 100% level of that previous higher time frame candle, okay? But our entry, as we know, is on that 25% retracement. And so as opposed to the regular outside candle setup, the entry would occur at the 25% mark of the previous range. And then we would look for hammers, inside candles, or shooters, as we would know, as we clarified in that level of precision, on those lower time frames. And then we have such a very useful stop level here, right? It's at the 12.5% of that range. Super simple. We keep it extremely simple, right? And this ensures that we have a tight risk and a pretty far target, all right? So typically our risk to reward is at least 2-to-1 most of the time, right? And beyond that, we can also have to the point of even 6-to-1, where our reward is so much greater than how much we're even risking. And so that's really our goal here, all right? And so let's jump into an example right here, all right? And so what we have built is an indicator for the 25 cents model of the LVL framework. The full indicator is the LVL framework, and eventually we're going to have more models available. And so with this indicator marks where are those previous day highs, where are those previous day lows, right? And it actually can be on any time frame, actually. If we double click on this, we get all of these options where we can select which higher time frame candle that we're looking at and what levels are going to be drawn based off of that. Here on QQQ, we have these levels drawn. This was the previous day, where we have the previous day high, previous day lows, and some levels identifying where those swing highs and swing lows are and when sweeps occur. And so as we're going through this, we're starting a new day, right? The very first thing that happens on this new day is we do what? We hit the high of the previous day, marked by this upper gray line. There's a high, the middle, and the low. And so after that, looks like we break further. And we're still going. Price is still moving forward. Okay? And then this is what we get here, right? We retrace through that 25% of this total range of the higher time frame candle. And at that moment, our entry is triggered, all right? And what we see here is that we have the price range identified between the high and low of the previous day, and we have labeled on the dashboard where our entry is, where our stop level would be, here at the 531.91 level. That would be the stop point. And then the potential full move, because we're looking for a move from this entry to take profit to, getting to the other side. That's where we're locking onto, right? And that is where, that would be, in this case, a 0.73% move, which for QQQ would be very large for trades, right? And we even have a suggested options trade, the strike price of 530 to be taken here, all right? What's available here is that our first take profit from this level would likely be the 50% level of that previous range. And again, TP2, where we really want this trade to go is at the other side. If we cross TP1, it increases the likelihood of us getting to TP2. And so as this went along here, we got a stop, we got a short trigger, and price absolutely collapsed here, right? Super simple. Just like that. And it happens this simple all the time. And so that's the beauty of this indicator, that it will mark out your entry, your stop loss, and even suggesting a strike price for you while visualizing it all in real time with updates that you can have along your trade. And what you can also do, which is really special, is that you can also set alerts on this same indicator. And so you can right click on your indicator, And you can set alerts on whichever tickers that you want to initiate this setup on. And so on QQQ, I can have it such that it reads on the daily higher time frame candle that when a long trigger happens, that I get notified every single time that occurs. And when a short trigger happens, I get notified when that occurs. All right. And so you can automate all of your trades by simply doing this with likely just a handful of stocks, maybe 5 to 10, where you would set these alerts. And then you would just wait for the trigger to happen and just follow through. Stick to this script, because our goal in terms of establishing a systematic strategy is to follow the regimen to the T. Just taking the trades when they show up, getting stopped out when we say that we should get stopped out, such that our risk is really low. From our risk to reward, right? Our reward is 5.8, just about 6 to 1 reward to risk, right? And this ended up being even greater, right? We would have likely just taken profit at each profit taking point, but just look at all the bonus that we were given in this specific trade. But that's what we want to establish, that we can better identify what trades are worth it. We don't want trades such that the potential reward is involving so much risk, right? We want the trades that we have a sensible entry and a sensible exit that fits in line with our risk management. Now let's look at a different example. This time looking at a higher time frame. If we open up the settings and then go to the weekly time frame, we can set this to the week. And so that'll give us the high, middle, and low of the previous week levels. And so when we start a new week, let's see what happens. Well, we form the high, middle, and low, is represented by these lines, and we hit the low of the previous week. Then we start forming higher highs, higher lows on this time frame. Eventually, as we retrace, we trigger the long level and then get to our first target price, right? And that's where we would take profit. Eventually, as this goes along, we have a full opportunity through the end of the week to get to the take profit 2 level. And so this gives us a huge range. As you see in this example, a 1.89% potential move in this stock. And so that's certainly something that we're looking forward to in terms of trying to create. So now let's put it all together, everything we learned. And so the very first thing we do when we mark any chart is look for the swing highs and swing lows. We identify them here. And then when we have a series of highs and higher highs, we connect those to form a broadening formation to define the range or the playground that we're trading within. As price traded back towards this level, we got a wick on this most recent candle. And that's how we know this is real, because we're crossing the boundary and being restricted by it. As price time went along, we actually started to form a shooter, exactly what we need, an actionable signal. And so this is just an example of how we can pair this with AutoStratic, which then generated an idea for an entry for puts. And that was the $61 puts for August. And so that's what was generated there. And so as time went along, and what we saw is that as price went along back through the defined range of this previous week, what we were able to identify once the price movement happened is that we had an entry and a new idea generated by the 25 cents for a 25% potential move to the downside, just using this setup. Because as we trade back through the range, we have such a large, a super far away target on the other side of this range. And so that just makes it so clear that this trade is all the way worth it, where from our entry to our exit is a lot of profit, while our stop loss is just really small in this example, right? And so as we trade along, even if we don't get the full move, we are good. And what we got was hitting that first take profit level, which gave us a move of a 8% drop on this stock. And this was over the course of 3 days. And so that was an absolute wonderful swing trade in this example. But this is where it gives you the full oversight about an easy entry with a sensible stop loss and understanding a trade that's so worth it, so juicy that you just can't resist, such that pressing the button to buy it, it just becomes so obvious. And that is what is here with this 25 cents LVL framework indicator. And that's really what I wanted to present. And I wanted to make sure that you have all the tools in your toolkit to make this ready for you. And so if you are ready to get started with this, definitely download the indicator. Ask any questions if you have any issues that you may come up with, or you just need help with applying the strategy. What more that we do is that we are here to educate you on this strategy, as well as to help prepare you for the weeks ahead to better applying it. And so many people have already gotten crazy wins. We found that each member has found at least one winning trade a day just utilizing this, and it just simplifies the process so much. So I'm excited for you to get started using it. And again, reach out if you ever need any help along the way.